So what are Trump accounts? That's what this video is about. We're going to talk about all that we know. Let's just jump right into it. So what are Trump accounts? They are tax advantage investment accounts that will be set up for minors under the age of 18. They're somewhat similar to IRAs, but with a little bit of a custodial 529 benefits kind of mixed in, and I'll explain what that looks like. So who's eligible? It's any child under the age of 18 with a valid Social Security number. And any child born between January 1st of 2025 through the end of December 2028 during those 4 years will receive a $1,000 head start. So where's that $1,000 coming from? Coming from the government, and right now there are very wealthy folks stepping in and pledging money. For example, Michael Dell has pledged over $6 billion to kickstart the $1,000 for children throughout the United States. Ray Dalio of hedge fund fame is pledging $65 million. What a cheapskate, right? Not $6 billion, but $65 million, and it's only for kids in Connecticut in lower income zip codes, which I think that part's pretty cool. Children born between those dates will get a $1,000 head start. What happens after that, we're not sure yet. Contribution limits. How can you contribute to it? The annual limit is going to be $5,000 a year. That will be adjusted for inflation. So $5,000 now will grow over the years, much like IRA contributions and things of that nature. Who can contribute? Parents, grandparents, generous aunts, uncles, pretty much anybody, but my understanding is that that $5,000 is per child. So it's not like you can have multiple Trump accounts like you would for a custodial account or a 529, something like that. That's subject to change, and I'm just going to go ahead and put a disclaimer in here. We're building the plane in the air, so a lot of this could look a little different tomorrow than it does today. The tax treatment, so money that is going in will be with after-tax dollars, and the earnings are tax deferred to some point in the future, kind of similar to an IRA. What does it look like on the way out? What about withdrawals once you actually start using this money? Well, under the age of 18, it's very restrictive, and it's probably not a good idea to take any money out of these things. The rules loosen up a little bit as we understand them today when you turn 18. And it's not just money that's in a retirement account only for retirement. There are some other uses that some we haven't seen before in financial instruments. For example, qualified uses, we have seen this before, similar to a 529, for qualified education expenses, college, vocational training, if you're doing an apprenticeship and you're going to be an electrician or some of the trades. My understanding as it stands today is that you can use the money penalty-free for that, but not tax-free. Home ownership. Up to $10,000 can be pulled out towards a first-time home purchase. I do think that's pretty cool. Entrepreneurship. You can pull money from the account to help use as capital for some type of business or startup. What are the limits? What are the rules, the restrictions? All of that is really muddy right now. I don't have much information to offer other than that is a possibility in the future. Details to follow at some point. Birth adoption. So up to $5,000 can be used for qualified birth/adoption expenses. Again, I don't know exactly what that means. There's just a possibility. And retirement. So maybe whatever's left over, if you don't use any of this for those previously mentioned uses, it'll be like an IRA that you can pull the money out in retirement. How do the taxes work on distributions? There's going to be a pro rata formula. So keep in mind that the money going in is after tax from whoever is contributing to them. So the money that is being distributed, a portion of that will be after-tax contributions. That's not going to be taxable again. The earnings will be taxed, and whatever that percentage is going to calculate how much of that will be taxable. Let me give you an example. So let's say $1,000 goes in, you don't put any new money, and it grows to $10,000 at some point in the future. 10%, right, your contribution, would not be taxable again. The 90% of the withdrawal or the growth of it would be taxable. So $1,000 free and clear, $9,000 would be subject to taxes. All right, so if this is of interest to you, how do we open these? How do we invest? What is it invested in? Let's talk through that. So parents or guardians can open using an IRS portal or form. Again, this is a little muddy. We're kind of building the plane in the air, as I mentioned. When you file your taxes, you can elect interest in opening a Trump account. No Trump accounts will be officially opened or eligible for funding until after July 4th of 2026. According to the official website, when you elect your interest in opening them, quote, a financial institution will receive your funds and activate your account. That's as much as the official website is giving us, so more details to follow. According to the official website, the investments must be in eligible, low-cost mutual funds or index-like funds. So from a financial planning standpoint, I do like low-cost funds. It's what we use here, so I think that's a good thing. And on the website, they give you some idea of what these accounts could grow to. I'll give you 3 scenarios directly from the website. So $1,000 seed funded, you never put any new money into it. They assumed the growth rate of the S&P 500 at the time. After 18 years, the child can then convert it over to, after 18, whatever that account status is going to be called, could grow to $5,800 with no contributions over 18 years. So the $1,000 plus $250 a year, what could that grow to over 18 years? It's over $20,000, $20,700 roughly. And if you max it out, you do $5,000 a year, assuming no contribution inflation adjustment, meaning $5,000 now, at some point you can contribute $6,000. Just $5,000 a year for 18 years could grow to over $300,000. Again, none of these returns are guaranteed. They are invested in stocks, whatever the low-cost funds are invested in. There's going to be volatility attached to it. Nothing is guaranteed with these accounts in terms of performance. So this is kind of similar, kind of different to a custodial account, an UTMA or an UGMA, UTMA or UGMA. But some of the differences are a little bit more favorable to the Trump accounts in terms of you don't have the kiddie tax. Anyone that has a child with a larger non-retirement custodial account, if there's anything over just a couple $1,000, you start getting into kiddie tax territory. That would not be the case with these newly created Trump accounts. Also different than custodial accounts, there's no automatic transfer of control at age 18 or 21, whatever the age of majority is in your state. So I always explain to parents, when you fund a custodial account for a child, at least in Maryland, when they turn 21, if they call me and they want to buy a Corvette with all this money that mom and dad or grandparents save for them, they're allowed to. I legally can't stop them. I could try to talk sense into them, and believe me, I do, but legally there's nothing any of us can do to stop them from making a bad decision. At 18, with Trump accounts, they kind of convert to an IRA. So they would have access to it, but be taxed and penalized. But it hopefully is just another layer of prevention from keeping these young adults from making bad financial decisions. So in summary, are Trump accounts a good thing or not? I can see a lot of different situations where these would be beneficial. However, they're so new and we don't have a lot of really important details to give you a clear indication. But I am interested and I will be following along and providing updates. So that's something that we're going to keep track of. And if you would like to stay on top of the different updates and rules and things as this picture becomes a little bit more clear, go to the official website, trumpaccounts.gov. You can put in your email address and they'll automatically send you updates. If you're not sure how to fund for future things for a child, whether a grandchild or your own child, feel free to call a qualified financial advisor and talk through a custodial account, a 529, or maybe some of these Trump accounts, or all 3. We're building the plane in the air, more to follow, but that's what we know right now. Give us a call or send us an email with any questions. And as always, thank you for watching.